What's up, beautiful people? This is Pope with Stock Doctor Trading. All right, just waking up for the pre-market breakdown, and the first thing I see is, boom, we are down. So, pretty hefty as well. I mean, we weren't even as up in pre-market yesterday as high as we are. Probably we're twice as down as that, if that makes any sense. So, yeah, that was not a sustained rally. That was more like shorts covering type of bear market bounce, and it's almost getting to the point where, as sure as in a bull market, you can buy the dip and live a happy lifestyle. This market is starting to get consistent enough where you can say you can short the peaks. You can put the peaks on these market rallies, and you're starting to see some real consistency with that working out as a plan. So the dollar is up again. And so that particular, indicator is, working conversely. When dollar goes up, equities are going down. Yesterday, dollar was down, equities are going up. But what's strange is that crude oil, WTI, is down pretty heavy, 4.46%. Brent is down to 110 per barrel, which is down just under 4%, so a little bit less. So oil's going down with the market and up with the market, which is strange, and the dollar is seeming to have more of an inverse correlation right now. So I'm thinking perhaps in terms of energy, this just really means that it's under that much of a ebb and flow of an investor influence in terms of energy right now. Natty gas down as well, gold down, silver down, copper down pretty strong, and soybeans. Oh my God, the soybeans. Mommy, can I add a little soybean? Okay, so enough about the soybeans. All right, so as the pre-markets open, like when you first see the first drastic moment in where the market's headed, it doesn't necessarily mean by the time you see this or by the time the market opens that we're going to be negative. It just it's a way to start seeing some of the levels and how they might have an effect on the overall pricing levels of the day. I mean, it's hard to get a real volume profile in pre-market because of the low volume. But at the same time, you can still get an idea of sentiment. And then, of course, you can start seeing the valuations of certain futures sectors and how they're playing out in certain ETFs and also commodities as well. And so that's what I'm seeing right off the bat. I mean, everything is red, and the VIX is up 2.83% right now. And Brazil is up, but everything else you can see, guys, it's a harsh day, and this is pretty much the opposite from what we saw yesterday. Yesterday we did not see the liquidity sweeps that we had been seeing last week, which were extremely heavy last week, but yesterday they really weren't on. They really wasn't the same type of a trading environment. So either the daily swing algorithm is pulling back right now and we're getting more into fundamental pricing valuation, more of a real pricing is coming out of this. And I love this article here, Crypto Bulls Charge Back. Cryptocurrency is another conversation. It's one of those things I'd love to have a talk with you guys about in depth a lot more. It's a really sensitive time, and it's a kind of a strange time for me to throw my hat into the conversation of cryptocurrency because there's a lot to that conversation and a lot to what's happening right now. So one of these days, let me know in the comments if you ever want to hear anything about that. So let's get over to news, everybody. The beautiful news. So we're going to see what kind of propaganda they're throwing at us right here. I'm here to do this for you every morning. I think these are probably my most useless videos to make, but I'm always up here in the morning anyway. I'm thinking about this stuff. I'm talking about it, like, why not make a video about it prep you guys for the morning as best I can, save you going through all these pop-ups. I mean, I feel like I'm taking like pop-up bombs left and right, videos playing here. Every single tab I have open is, oh geez, I am not paying for your subscription, sir. It's not worth it. It's free information. And all right, so right away we have a couple things. There's the rail strike that is happening right now. This is a way bigger conversation that's not being played out in the mainstream news that much. Basically, the biggest news we have this morning is UK's CPI print came in almost similar to ours, except theirs is 9.1 instead of the 9% that they were expecting. So they're still printing up as well. And you have to understand how big an effect it is. Any country in the world having more inflation is just showing that we have this big global bubble of inflation. So any central bank at any one country upping or lowering rates or tightening or easing or anything like that, they're just kind of playing whack-a-mole with certain countries' financial conditions, when in fact we have a global supply chain destruction. And you can see that in the inflation numbers, even though those inflation numbers are meant to hide things, as we always talk about. But on top of that, we have some other kind of devious stuff going on. So yeah, here we go. We know that oil is down this morning. They say this is because Biden expected to cut U.S. fuel costs. They will make up any narrative to keep the conversation going, won't they? Okay, but this is one I really want to talk about because this has to do with a hegemony. And Russians' ruble finds a 7-year high past 53 versus dollar in Moscow trade. So our sanctions really aren't working. And that's one of the things when you sanction a country that you're only doing about, 25 to $40 billion in global trade with per year. Sanctions actually don't really hurt them quite as bad as you wish that they would. And what we have now is Russia has not had to stop selling oil or natural gas to the world. So they're actually doing really well. And they're being able to trade these commodities. And this was not anything part of the petrodollar before. It was always traded through the dollar. And that's changing right in front of our eyes right now. Right. This is like such a huge conversation that I don't even think the mainstream narrative can't even grasp it. It can't even, grasp the fact that the dollar is going to lose a lot of its strength coming up. I mean, talk about it at an all-time high. I mean, we're going to see that change in the next 3 to 6 months. We're going to see that change heavily. Unfortunately, especially as the next winter hits up once we get through summer here. So I think this conversation is a big one. I mean, anytime the world's global currency is under attack, you're going to have repercussions that revolve throughout the entire economy, and they usually lead to war of one format or the other. And we know we've already been in economic war. So the question is, how far are they going to take this on us? We know that they'll take it a lot further before they ever decide to take responsibility for what's going on. But don't worry, everyone. We have some good news here. Good news. As much as the economy may be down, we are about to start pumping up the medical glove industry. You want manufacturing back in the States? You got it, baby. Yeah, we're getting it. We're getting it. U.S. factories pop up to make medical gloves, spurred by pandemic. This is 1 hour ago. This is today, June 22nd, 2022. Spurned by pandemic. Do you mean the pandemic that's over? Now it's like, all right, we got to do something. So we're in Fayetteville, Alabama, and rising from a muddy field in the outskirts of a small town of Fayetteville, Alabama is a bricks and mortar symbol of the global COVID pandemic. A new glove factory, that's right, boy. All right, so when completed in 2024, the complex, owned by Japan's Shawa Glove Company will be able to produce 3 billion medical-grade nitrile gloves this year from its dozen massive new 5 stories tall automated assembly line for gloves. Oh, this is going to be incredible. You won't even believe it. It's a company owned by Japan, so we're bringing manufacturing home, but they're not our companies, they're Japan's. That's who's going to profit off it. All right. So this is a pre-market update. We can't get too much into it much more. It takes me enough to make this video, make sure it gets out to you by the morning. The market mind, inflation psychology. Oh boy, I actually think this could be an interesting article. They're talking about that. There's 9.1 headed for 11% print of the Bank of England forecast by October. Holy crap. The Bank of New England not only printed the 9.1%, but they also are forecasting 11 by October. Our bank never does that. Damn. Oh man, well they better open up some medical glove stores. Somebody gotta tell those homeboys over in UK, you got to make some gloves. Get with it. We got a spurned by the pandemic manufacturing industry coming back, baby. You guys gotta start making some gloves. All right, so those are the main news stories. I'm not seeing that much about the rail. I think the rail conversation, the rail strike, is going to be way huge. The last thing that we need is more and more and more supply and demand issues. Okay, so then I always like it every morning to go over and see what the mainstream narrative. These are the shills, right? And mainstreams is like Bloomberg and maybe New York Times on the business section. So let's see here. Bloomberg's got a banging list of headlines here. Let's take a look. So, and no, I do not pay for this. No, thank you very much. It's just headlines to see what the mainstream narrative is. So, number one, Citigroup economists see chance of global recession nearing 50%. Oh, wow, yeah. These are not the same people that set the odds in Vegas. I bet the Vegas odds setters are already at 90-95%. And what's crazy about this is that it would take, if second quarter GDP has any sort of positive print, 0 or 0.1% positive, then the recession can't technically happen until 2023. So it won't be until 2023. So if it doesn't happen on July 25th, it can't be until 2023 that we're technically in a recession. Again, that will be the next possible opportunity for that. So that's what's crazy about this calculation, right? The economy is not good. They're saying it is good. Employment's low, unemployment's low, but nobody's got a job that they like. And still here we are. And I only made it through one headline just to discuss that. Jesus, this is good for you, Citigroup. Good on you, economists at Citigroup. 50%. It really even matters what a technical recession is versus just, yo man, we broke. This place is not getting any better. What's the problem here? All right, Deutsche Bank awaits market calm before going long China stocks. There's a lot of this narrative about China, but China stocks haven't been doing bad while our market's been tanking. So there's certain people that may keep an eye on kind of the mainstream narrative about not investing in China stocks during a time when, U.S. stocks and equities are going down and China's not. Take a look. Okay, and so ECB says Europe's economy seen far from stagflation scenario. Yeah, you're too broke for stagflation. Harrods delays summer sale for new season's goods slow to arrive because you broke. All right, let's just get through. That's pretty much it. Existing home sales prices hit record in May. It depends on who you're asking. All right, people, that's the pre-market. Good luck. Hold on to your butts. Hopefully by the time you guys are watching this, we've seen a little bit of recovery in this market here. But I mean, it's not looking strong right now. When the Russell small cap 2000's down that much, it could be pain, could be real pain. So keep an eye out. I'm not expecting many liquidity sweeps again today based on yesterday, but let's keep an eye out. Look for large swings and large volatile moves. And I'll try to get some more videos out to you very, very soon. I have got a couple that I'm working on right now. 6 strategies. 6. I don't have that many fingers. 6 strategies for a recessionary portfolio strategy that you could trade with. And I'm working on flushing all those out, and that's coming up soon, hot off the presses. Like, comment, subscribe, please. I'm trying to get up in this world, people. Let them know.